Here we are on August 30th, Friday. We continue in this critical point in the stock markets I've been talking about. And it's being created by falling bond yields, seeing a weakening economy, while there's hope on the other side for a trade deal with China and more stimulus from the Fed and central banks, which are already primed to do so. So we have this stalemate, and we're in this month-long sideways corrections. We're on the top of it now. We're on the bottom of it just days ago. We're going to break up or down out of this, and that'll take us back to the past highs in July, or if we break down to the lows in early June. And from there, we break up, it's very bullish, down, very bearish. And I've been saying for months now, stocks are going to break up 20-25% or down 20-25%. So we're still hanging there, and we should know, literally, get better ideas in the next week, and I'll cover that. But I mean, the big story continues to also to be a weakening global economy after the big tax stimulus from Trump in 2018. Here we are, second quarter 2019. Where's real GDP? Back to the dreaded 2%. The most we can get with the greatest stimulus plan in history. Now, if you have to take Viagra to have sex, you got a low libido. If you got to take two of them, you're dead, okay? We're in that dead zone. Massive stimulus and more planned. I mean, Trump's already talking about payroll tax cuts, which is money directly, real time into the hands of everyday consumers. That's the one thing they haven't done yet. Germany is looking like they're going into a recession in the third quarter. And Italy already started to do that in late 2019. So again, slowing everywhere. The retail sectors, the financial sectors of the stock market have been underperforming for many, many months. Home construction peaked almost 2 years ago. Actually, almost exactly 2 years ago. All of these leading indicators I showed recently, RV sales are crashing in the last year, especially in 2019. Everything points to, no matter how much we stimulate, we get a weak economy, and it's going to get weaker. And without stimulus, we know, anybody cannot not know that we would be in deflation and a depression like we started in 2008. How can even the most simple-minded economists not get that if it takes this much stimulus to get 0, 1%, maybe 2% inflation, and at best 2% growth, how dead is the economy? We're not going to move forward until we accept that we have too much debt, slowing demographics, restructure that debt, get rid of zombie banks and failing companies, and clear the decks to move from winter into spring. We're already in winter. That's 2% with massive stimulus, tells you that. So again, that's the outlook. I'm going to keep you updated. We are likely to make the first break out of this trading range in stocks in the next week or so at the most, and then not too long after that, we're going to break strongly up or down, and that's going to have a lot to do with how this dark window finale finally breaks out, and we're going to be right on it.